Good afternoon. It's Peter Temple on August the 8th, 2020, and I just thought I would this weekend give you a good idea of where we're going in the market. Because one of the things that's taken up a tremendous amount of my time this week is the fact that we appear to be topping in the US indices and also in a number of other asset classes like gold and oil and also the US dollar, which is actually bottoming at the moment. And it's interesting, if you watch the mainstream media, you don't have to watch charts, but when they start talking about things being at an extreme, like the US dollar, there's lots of articles coming out right now about the dollar collapsing. Well, of course, the dollar's at a turning point. And you can always tell when, again, pundits start getting into the mainstream media and talking about the world falling apart, that the market always goes in the opposite direction. And that's what we're seeing. And, I've been talking for a long time about the market moving in tandem, and it is based on risk and actually the debt problem that we've got right now. And so we've got international indices, for example, or exchanges like the DAX, the German exchange, which has already topped. And we're looking at oil, which looks like it's already topped, and we've got the rest of the asset classes like currencies and gold and silver, which are looking at possibly topping at the same time. So the whole market is moving in tandem. And this is looking at the 2-day chart of the S&P 500, where you can see we have something that I would refer to as a broadening top, which is not necessarily an Elliott wave pattern. And I follow Elliott wave because it is really the way that the market moves. And the market, you get pundits that always talk about, well, the market moved because of this or that event, and it never moves beyond about 1 or 2 days based on an event. It is always the mood of the herd, is what we refer to it as, because you always get the same patterns that trace out over and over and over again, and they don't have anything to do with the events that are unfolding. And I've written articles on this sort of thing. But let's get to what's happening this weekend and into the following week, because I think we're going to get a top and a change in trend this week. So we've got this broadening top in the S&P 500, and we've got this great big, this is what we would refer to as a fourth wave. There are 5 waves in the market, and I'm expecting this A, B, C. You always get a 3-wave move in a fourth wave, and because that means it's corrective. And a fourth wave is always corrective. And what corrective means is that it will ultimately completely retrace. So we have an A, B, and I'm expecting a C wave, and this will ultimately retrace to a final high, and that will be the top of the market. And then we are going to get our big collapse, and I'm expecting that to be in 2020. And you can go to the topics area and under the stock market. There you'll find another video which tells you sort of about the big picture. But I'm looking at more the picture that I'm seeing over the next month or so. And we had this wave come down in about a month. I mean, that's really spectacular when you look at the distance, because that was, a good 1,000 points. And it looks like this wave down is going to give us about a 1,300 point drop over about the next month or so, or 2 months at the most. I really expect this to bottom sometime in September, so that we will probably get a whole bunch of stimulus into the market again. They'll make a last-ditch effort to inflate and get the market up. And it will be successful. It's going to go there anyway. But, if you think about a month coming down, this has taken 4 months to go up, another month and a half coming down, and I would expect this would maybe 6 to 8 months to get back up to the top. So I'm looking at a top, I think, the first part of next year, 2021. And I'm thinking that probably, they'll throw a whole bunch of money at this, and the market will start going up relatively quickly. There'll be a whole bunch of hope, and that is going to be positive for Trump in terms of the election, but they're talking about mail-in ballots, and that is a contentious issue, and I don't know if they're going to get counted anytime soon. So we may have this huge disruption, even though the market heads up, and then I would expect a civil war as the market starts to come down. So those are the things that I see just based on cycles and what I'm expecting from that regard and what the market is doing, because they tend to move somewhat in tandem in that regard. Because I look at the market as the mathematical representation on the mood, the social mood of the herd, most of the population, and that's really what it tells you. So here is a three-wave move to the upside. I won't go into the details of that, and I'm expecting this to come down somewhere to, I think, around the 1950 area. And just by my measurements, and I'm not going to go into the details of that, but Fibonacci measurements run all through the market, and you tend to get almost all the time it will drop to a Fibonacci level, and there is a relationship right now between this A wave and this level right here, which is about 1963, and that's what I'm really expecting. It's somewhere in this area that it will drop to. It also drops to the previous fourth wave of one lesser degree, and that's down here at about 1850, I think it is, somewhere in that area. So that is looking at the market on a 2-day basis. If I actually go look at the S&P 500 on a 2-hour chart, which is this chart here, you can see that we have that same big wave down that took a month. It's an ABC wave. It's marked WXY, but it means the same thing. And then this is a corrective wave to the upside. And again, Fibonacci measurements off an A wave. This is pointing to the 2.618 extension, which in Elliott wave math, this is about as far as a corrective wave can go. So this wave is corrective, and we have a top right now. And in fact, if you looked at some of the other indices and the New York Stock Exchange, the New York Stock Exchange is at a double top this weekend, and we have also the Russell 2000 at a double top, and also the Dow. So all of these are set up to come down, and I'm expecting a 3-wave move in the S&P 500, again taking us down. This is the same measurement of 1963 here, and it looks like we're going to get this. I think we're going to get it this week, a turn to the downside, because all of the different asset classes are at inflection points. And the next thing I'm going to show you is the dollar, and that is also at an inflection point, and let's go to that now. So that's the move to the downside that I'm expecting. I think this is only going to take about a month and a half, because this wave did the same thing, and that will make this a great big ABC, as I pointed out on the other chart. So looking at the US dollar, this is a chart showing the dollar going to the upside, and it has completed, you can see here, a 1, 2, 3, 4, 5 waves to the upside. And when you get 5 waves, that means you are going to get a following 5 waves at least. This is a pattern that says there's another set of waves coming. After we had that 5th wave, which I'm calling the first or the A wave to the upside, we've had this ABC corrective wave to the downside, which has surpassed a little bit the 62% retrace level, which is typically where a second wave goes to. So this is corrective, and it will completely retrace. And so we have a little bit on the inflation side right now, but you can see how we're looking like we're bottoming here. And I'm not going to go into the details of this for this particular little video, but we are at an inflection point, and I'm looking for a turn to the upside here, which is deflationary. And this should give us another set of 5 waves to the upside, which is going to take quite a long time. This actually wave has been about 2 years, going from 2018 beginning, actually I guess it's almost 3 years, 2.5 years, to the middle of 2020. And I'm expecting this to turn, I think, this week with the rest of the market and to the upside. And this wave, first wave, will go up quite high to at least about 104, I would think. And when we have our final wave to the upside in the US market, we should see this turn back down and give us a second wave, or even could go back to a double bottom here, but I would see that coming back down one more time and then heading up for good to the upside. So that's looking at where the dollar is. And again, everybody's talking about the collapse of the dollar. They're expecting it to come down, but this is a corrective wave, and the measurement says that we're actually at an inflection point here and should head to the upside. Now, looking at gold, this is a 9-day chart of gold showing you the high in 2012, which was the top of a third wave. And I didn't actually expect us to get a fifth wave right away, but we've had an ABC down to this level to about 1030, and we do have a corrective wave to the upside, which is at an inflection point now. So if you measure the A wave again, you can get the C wave, which is this whole wave up here, the C wave, that is 2.618 the length of this A wave, and that would be the maximum that you would expect to get in a corrective wave, and so I'm expecting a turn down. Now, we have this wave here, which is actually the only sort of, there's a 5-waver here. This is 3 waves, and another 5-waver here, which gives me a full count. So I'm expecting a wave to turn to the downside, but I don't know if we're going to get another wave up to get a double top. I would expect we are. So we may get a very large wave to the downside here as a 4th wave, and then get one more wave to the upside before this thing finally collapses. I'm not sure how that's going to work, but you know, with the dollar turning down and the dollar being turning up rather, and gold turning to the downside, one of the things that there is a relationship in that the gold is priced in US dollars, so gold should ultimately come down. In any case, we have an inflection point that we're at now. We have a full count, and I'm looking for an imminent turn down in gold. So that is, and if you look to oil, which I'm not going to cover, oil has actually, looks like it has just topped, and it should come down to the $6 level or less. And we're seeing the DAX, which is already topped. There's an international exchange. We're going to get exchanges around the world also coming down with this turn. So it's really going to be a dramatic turn and drop over the next month, which of course will be blamed on COVID and what's going on, but it really doesn't have any, the market doesn't have any relation to the virus. That is an event, and it doesn't really affect the market. The market, of course, while we've had the pandemic, has been moving up, which you would think would be the opposite if there was an event, if it actually had something to do with an event. So it's been moving in the opposite direction. And now that COVID is sort of over, as I have shown elsewhere in the newsletter, this market is actually going to come down, and certainly the S&P 500, which we're looking at as well. So that's kind of an overview of the market right now. And another reason that I sort of wanted to wait until a little later on this week to get the newsletter out once I sort of missed my deadline is that, you know, I knew this was going to be topping, and it's so close now that I think, you know, a heads up over the next week, we should see everything sort of turn to the downside. So that's a look at the market, and I will be doing that for you on a monthly basis.